afternoon, everyone. Thank you very much for joining. Rafisa, please join. Yeah. Great. So Philip from Fireblocks will probably join us. If not, we'll just handle it all three. Thank you very much for coming, and you're very welcome to our next panel on RWA tokenization, or rather the use of RWAs. Oh, here we are. Well, awesome. We're missing you. You're very welcome, and thank you for joining us. So I was saying that, this whole morning and early afternoon, we were talking about bringing RWAs on-chain, right? So the very first speech and panel started with discussing the particular assets that could be brought on-chain, and we figured out that anything could be brought on-chain, from horses and turtles to, well, parents and football players, right? But today, in this panel, we want to focus specifically on making those assets usable in broader on-chain finance world, right? Once we bring them on-chain, once we record the ownership on-chain. My name is Alenka. I'm RWA advisor and head of tokenization at Atom Tokens, where we're building institutional rails for strategic commodity financing. And in a moment, I'm going to pass the mic to this amazing lineup of speakers that join us today. So we have Dyma, Raafi, and Philip. From different angles, right? From different companies, which makes it really, really interesting, so that we can approach the topic from different perspectives. So guys, please, as always, a short intro about yourself, and please name one single thing that you believe your company does best in the RWA tokenization space. Philip, let's start with you. You're also late, so you go us.
So yeah, I guess I have to go first then, apologies. My name is Clonen. I've been with Fireblocks for about 4 years now. Initially joined to scale up the operations in the region. These days I lead our financial institutions business for the Middle East and Africa. So Yuval earlier in the last session was talking a little bit about banks, which is where I spend most of my time these days. So very painful and slow, but it's accelerating. And in terms of the subjects, what we do as an organization is provide infrastructure to allow market participants to bring assets, real-world assets, on-chain in a secure and compliant way.
And are you best at doing that?
We are absolutely the best at doing that, yeah.
Maybe. Hi, my name is Raafi. I'm actually based out of Malaysia, so I work for Fasset. Joined about February, so again, I also came from traditional bank. And in fact, prior to joining Fasset, I built a digital bank from scratch. Spent about 3.5 years, and that's when I came to realize that it's very painful. So I joined Fasset. I'm here to actually, I'm based out of Malaysia, but because I'm Managing Director of Global Consumer Banking, so I'll be spending 50% out of Dubai. So I think a lot of you know who Fasset is. So what we're best is, we're RWA, the whole app is real-world assets that we allow for, especially those in the emerging markets, the ability to participate in investments which they would normally not otherwise have access to, if not because of tokenization. Thanks.
Hello, I'm Dyma. I'm a crypto bro on the scene. Been in crypto for quite a while. I built Hacken, a cybersecurity company, which does a lot of different stuff in the space. Right now, focusing on the core 3 is a risk data platform for crypto projects, including RWAs. What we can do best is to explain you the risks of crypto and different ways how hackers, fraudsters, and scammers can steal your money. And highlighting that and providing the mitigation and disclosure strategies for investors as well, how not to get into scammy stuff.
Thank you, Dyma. All right, so apparently we have a crypto bro and 2 bankers. That makes it even more exciting. Awesome. So, look, guys, actually the original naming for the panel did contain the word RWA5, right? I clearly remember that. Now we've changed it a bit, maybe to make it more appealing and more understandable to our audience, but I actually want to focus on that buzzword, as we call it, RWA5. So let's define the taxonomy here. Let's define what exactly we're talking about, because again, bringing an asset on-chain is one thing, but then making it usable in broader finance on-chain is a different thing, right? So let's brainstorm, let's talk a bit more about what exactly we mean by the very term RWA5, which I personally like. For me, it's not a buzzword, it does have like a deep underlying meaning. So whoever wants to start, what RWA5 means to you and how your company helps make all these RWAs that we're bringing to blockchain more usable. Dyma, I'm looking at you. I think you should
Okay,
start.
I'm as a crypto bro. Yeah, I'm for the technology here. Yeah, so I think the RWA unlocks the permissionless liquidity, worldwide liquidity, especially retail liquidity. So basically, the RWAs unlocks the potential for projects to fund their ideas, yeah, and all over the world and without any borders. That's my take.
So I think traditionally RWA, how it first started off is a means of fractionalizing the asset and the ability for more people to invest in it. But we at Fasset, we started off using RWA, crypto as a card. So you use the card so you can invest in it, but you can also use it. So recently we opened for registration a gold-backed, tokenized gold-backed card, which we partner with Tether. So we are moving away from just stablecoin. RWA, so we're moving into gold. So that's only a start of it. So you can start looking at using tokenized assets to spend it rather than just to keep it and invest. Yeah. So that's what we're doing at Fasset.
So the use case here is essentially to be able to spend this token, right? Apart from just holding it and. Well, I think in this case, benefiting from the price appreciation,
yes,
right, of gold, which is the underlying asset. But my question is, can you then use it in broader finance in terms of like using it as collateral, for example, to borrow against it?
Yeah, you could.
Is it already like visible or is it on the roadmap?
So we have, which is still on proof of concept, that we for the asset that we have, that we allow for short-term credit. So is that what you're asking? Yeah. So it's already available on Fasset app at the moment. Yeah.
Yeah, Dyma, back to you then.
So where is the RWA in this case? It's just in your app is the number that you hold something, right? Where is RWA?
So it's on the app, yeah. So what do you mean?
No, I mean, like, where is on-chain liquidity and why do you need on-chain liquidity?
Well, because there are people who would like to collateralize their asset, and so that we allow the credit, but it's still not widely available yet. It's still on proof of concept because we're moving towards one of the things that Fasset is looking is where we just got our banking license, so we are exploring on providing credit, and one of it is to collateralize against our digital assets.
So do you have a concern that it's held in custody by the app owner, and so that users cannot literally hold it on their self-custody wallets? Is it what you're saying?
Yes. Yes.
Yeah, but this is just a different model, right?
No, yeah.
I mean,
I'm as a crypto bro a little bit sad.
Okay, but look, we're going to get there for sure, and you should talk to Raafi after the panel to discuss that. But I think, look, at last panel we had Cast, which is also a central service provider. Even though, they did mention that Gauntlet decentralized wallets are already available on the platform, right? Of course, it's wrapped for the end user in a very, user-friendly way, so they're abstracting away the entire difficulty. But again, underlying approach could be holding it on a self-custody wallet. Absolutely, I think we'll definitely get there. Philippe, so what do you have to say on that?
I think this is an interesting topic because ultimately we're very early days in terms of how retail investors consume these products. I think the most important thing right now is that they do have access to them to start consuming them. Longer term, I agree with Dyma, then the sophistication of the retail investor will demand most probably that they keep these assets in their own custody where they manage the keys, but those keys are completely abstracted from them and then they have their own wallets. But right now there are many service providers that are providing that custody on behalf of their consumers. I think the important message is that this is a big part of how tokenization and blockchain in general is democratizing finance for every person and allowing assets which were very inaccessible, lowering those barriers of entry and giving everybody access to previously illiquid assets to build portfolios. You can't buy necessarily everybody a full property or a racehorse, and these are the kind of projects that we've seen on Fireblocks, people tokenizing racehorses, wine, whiskey, which is much more my area of expertise. And so I think that's the important phase one, is that this technology and the infrastructure around it is allowing this movement of more traditional financial assets to move on chain. And then in terms of how investors and institutions will consume it, I think that will be refined over time.
Philip, question to you. So I know for sure that Anchorage Digital does offer at least one vaults for sure to their clients. Do you have, and again, the underlying strategies are still like DeFi, right? Just lending or now very more full. But do you have something similar, and are you looking into that direction to essentially allow your customers who hold their assets in your custody to also be able to be exposed to those RWA vaults, let's say curated by the best names in the space? Do you have that on the roadmap, or maybe already implemented?
Yeah, actually pretty timely, but as a infrastructure technology provider, we service the entire market. So our customers are the ones that create products and services using Fireblocks as a back end. So in many areas, they do compete with each other to provide services and products to the general market. And we are agnostic to what our customers do as a workload on Fireblocks. But of course, we continue to try and implement capabilities that allow them to offer more sophisticated products and services. And actually just, I think about a week ago, we released earn products on our infrastructure, so integration with Morpho and Aave in particular, so that our customers can, off the bat, as a native integration, use that capability directly when they implement our technology.
But that's going to be the individual decision, right? So let's say I want to just lend my USDC directly to Morpho into a vault that could be managed by Clonen or Centauro, right? So that kind of thing.
Correct. So when you look at large organizations, fintechs that are using our technology like Robinhood and Revolut, Juha mentioned earlier about MoneyGram, about the kind of scale they're doing now and what they're moving. This all goes on our infrastructure. So again, it's completely up to our customers what they wish to build. We aim to provide a flexible architecture and infrastructure which allows them to go to market quickly and manage custody either on behalf of their own B2C customers or B2B customers, or give that customer to the end user with a very recent acquisition we made of a company called Dynamic, which is the leading non-custodial wallet in the market. And adoption there is pretty aggressive, which is probably makes Dyma quite happy to see that that's moving very nicely now.
It's questionable, where it's moving.
Okay, so we're going to skeptic on this panel. Dyma, let me get back to you now. Okay, so let's imagine an ideal scenario for you. So can you explain us, can you describe us this perfect flow that you see for RWAs in a broader on-chain finance market?
Great, thank you. Thank you for this question. So I see it in the way that we have market RWA yield aggregators, market leaders, let's say like this. They have they're gathering a lot of different on-chain yield opportunities for off-chain projects, and they are doing their job very well in terms of providing the risk analysis of these yield opportunities. And people can, in permissionless manner, put their stables or whatever and earn this yield. And this yield is competitive, is around 10-12%. And we, as an industry, are benefiting from more and more projects being funded through this model. Yeah, but again, the elephant here is are the risks. Yeah,
so are you saying that the platform that you're describing is undertaking the whole risk, right?
Not necessarily, yeah, because you cannot do all the things at once, yeah. So there are some, like Plume is doing something like this.
Plume, yeah, so
Plume.
we have this great marketplace.
Yeah, Nests, yeah. Right, yeah. So they're struggling to add new yield opportunities because those yield opportunities, not all yield opportunities can pass a proper risk analysis. Yes, because the risk analysis includes not just the technical part, but also legal part, financial part, scalability part, business continuity part. So it's a big portion of due diligence that is basically the banks are doing when they are giving away, when they are giving the loans. Yeah?
Exactly. So the problem is that we need to do a very proper off-chain underwriting, right? Because and that's the greatest challenge, I think.
Off-chain, on-chain, yeah.
On-chain part, we probably are good at it, right?
Not necessarily. The technicals is not covered yet as well.
Here's the difference between, let's say, RWA in a tokenized form and DeFi, right? Because in the RWAs, you also have this complex off-chain part where you need to underwrite. And if you're giving a loan to a bad player that's never gonna, give the money back, what exactly are you going to do on chain? If you have everything attested in a proper manner, if you have your smart contracts like audited by you multiple times, you're never going to do anything unless it's structured. It's structured in a proper legal way, as you said.
Yeah, I said the same. So off-chain is even more important. But even if you think off-chain is all properly done, you still can lose all your money if there is some backdoor in the smart contracts. So it's
that for sure. And this is exactly the magic and the complexity here, that we're kind of merging the two worlds, and we're doubling both the risks, right, and the opportunity, because as you said, like 10-12% yield is very different from what we are seeing in low risk DeFi right now, right? Anyway, Raafi, I have a question to you. So since you are already into that and you are already offering such products to your customers, could you talk a bit more about maybe the due diligence that you're making on them? Like how you're handling this entire series of risks and challenges that are emerging around that type of assets?
Well, the ones that we're offering is very low amount, and because it's collateralized basically on the digital asset. So we're not even thinking about the typical credit credit scoring risks, because this is still very a testing stage, early stage, probably similar to some of the unsecured fundings that traditional banks provide, and you build the credit rating over time, which that's what we are moving towards when we because we're getting a banking license and we want to start thinking about how we provide credit products. So that's what we have. But coming back to the underwriting on off-chain, I do agree, because we have a prop tech real estate property platform that we have, and some of these what we do is we look at the development property, big developments, and we allow for investors to start investing even when it's bare land and as you start construction it. So, one of the things that we need to make sure is that, you provide proper due diligence on the marketability and the commercial viability of, development of the real estates. So that's very much off chain, and that's something that you have to do in a very typical traditional financing of a development of especially large-scale property. So it's something that we need to think about, especially when we provide larger credit products when we do start to become a bank. That's something that we still haven't got it figured out, actually, to be honest. Yeah.
Yeah, 100%. And the thing that I think crypto bros, not taking Dyma's example because he can understand what he's talking about. A lot of crypto bros think that it's very easy to replicate the entire underwriting system on chain, right? But we can't really do it. We still need to rely on traditional players when we are underwriting for such type of financing, as you were saying, right? For those markets as real estate, as whatever, strategic commodities, etc., because these are systems that have been built for years. Right, and they work in a very inefficient way, as we already understand, right? So trying to bring them onto the blockchain does help us resolve the issues of costs and time, right? And capital inefficiency, because we're just locked in for years, right? And the opportunity cost here, while that exact producer or real estate developer is waiting for the capital to kind of flow in, is huge. Anyway, no, this is great that we're all on the same page here. And guys, I have a very direct personal question to you. Do you actually use any of those RWA assets yourself? Do you invest in them? Have you tested anything exciting recently? If we're talking about real usability, tradability, etc.
Yeah, I can talk about one use case. Yeah, so we have tokenized some percentage of our shares. We did it through the Spanish SPV. We have transferred those percentage to the Spanish SPV, and it's basically a blank company that holds only our percentages. We have tokenized the shares of this company, and we made a small private placement. So the guys have received their bought the percentage of the company and in the form of the token.
But is it a single entity or multiple people that bought the?
No, it's quite few people who bought into this company. They bought the token, which represents the share in this SPV, which SPV represents the share in our company.
It's still private, right? Hacken, it's a private company.
Private.
But
now
with huge fans. Okay, so we're tapping into this amazing, interesting trend of pre-IPOs, right? That have been really talked about a lot recently. Okay, how are we with timing? I don't have my watch. I also don't see the organizer. We need to wrap up. Okay. Okay, that's very unfortunate. Well, guys, maybe since Dyma already shared this great use case of tokenizing the pre-IPO shares, are they going to be available? Is there going to be another wave of the tokenization?
Oh, we like to experiment. We like to play. So we did this everything according to EU law. And the platform that helped us, maybe I can even advertise it. It's not my company. It's Brickin. Yeah, so if you
did it via Brickin.
Yeah.
Okay.
Yeah. And our use case, the specific use case, was in the European Union second cohort, the sandbox cohort. So they basically used this case to scale it.
You should let us know when you're going to be doing that again. We want to try. Okay, anyway, to make it very practical to our audience, let's bring up one case, one particular asset that can be bought, can be purchased by every one of us today. I can essentially start if you want. Let me maybe pick the simplest one. So, okay, everyone knows what T-bills are, right? And you, as a retail investor, I'm pretty sure we have a lot of accredited investors here in this room, well, I hope so. But let's talk about retail, the maths user. You can essentially go to the same Nest, that's the platform by Plume, and you can invest into their and basis vault and get exposure to tokenized T-bills. You just do it in one click, right? Obviously, like 3.5% yield probably is very attractive to many people in this room, but you can try, right? I'm just saying it's open, it's available, it's not only for institutions, and that's what RWA 5 essentially means, right? We're making it available, accessible. That's always been the promise of blockchain, right? So my case is N basis, which is, I mean, boring. You'll find so many interesting like private credit backed products on the same platform, but just start with N basis. That's my piece of advice. Dyma, what's yours?
Yeah, I can't stop talking. So there is an amazing startup that I really love the idea. So initially they were doing the virtual food brands, not like the Cloud Kitchen, but they were agreeing with famous food brands like Mr. Beast or whatever that they will use the brand, agree with some restaurant with a spare capacity, and this food brand will appear in Talabat, Karim, and everybody can order their burgers. So they are doing it as a business, and right now what they do is they will start do the they start to offer the food brands, existing ones, and any influencers who wants to start selling their burgers, pizzas, whatever in Talabat, Karim, they started to offer them this IP tokenization and basically the margin tokenization product. Yeah, so basically the food brand is receiving 6% of the revenue from everything that's being sold. And yeah, this 6% are tokenized, and everybody can participate in this 6% by buying their putting the money. So I really like this idea because it unlocks the potential of everybody to, I don't know, to take out from the pocket his granny recipe, fundraise for it, appear in Talabat, Karim, and people will make money and spreading the word about the grandma recipe. And it's just, this is the beauty of RWA.
How diverse that is. I started with T-bills and Dyma's continuing with IV and burgers on Talabat and Karim. Raafi, what is your single best case now? Is it this tokenized gold inside Fasset?
I've got to back it.
No investment advice, of course.
I can't.
Yeah. Okay, look, we all understand. I can say that. Like, we should track Fasset properly as an end user product. Philippe, what's yours?
I'll mention two small things. My longest standing friend a few years ago invested insanely in a Australian racehorse, and he has since cost him inordinate amounts of money feeding it, clothing it, whatever you need to do with a horse. The day I sat him down and explained that there were companies tokenizing racehorses and he could have just bought a token from an app on his phone, his face dropped. But for me, one of the killer use cases I see, certainly here in the UAE, as a long-term skeptic around real estate in particular as an investor, I've always found it very cumbersome, always found it very expensive and time-consuming, the idea of being a landlord. So when we see Pripco and Control Alt and the pioneers in the market here, I think that's an amazing example of how barriers to entry are being released and democratizing finance. And I can now, along with many of my friends who feel the same way about the asset class in a traditional sense, have access to bringing that asset class into our portfolios at the click of a button. So I think for me, that's one highly regulated here, which is going to explode regionally and I think around the world as well.
100%. And the most beautiful thing is that it's done with the official support of the government, right, within this great sandbox with DoD and VARA, so thank you very much to the local authorities for allowing that to be done, in a very, very clean and transparent manner. Look, guys, I think you have a lot of options on where to go and to test. No investment advice again, but we have, vast array of assets ranging from T-bills, IP, tokenized gold, real estate. And the thing is, I'm pretty sure in a few years, not only are we going to be able to invest in those assets, but also make most use of them, right? Again, using them as collateral for ultimately trading, for lending, etc. Interoperability is a different angle, which we have not touched upon. It's still interesting, but we need to wrap up. Thank you so much. I hope that was useful. Everyone should be testing that every day. That's exciting. That's the future. Thank you.
Thank you.